before we get to that, let's quickly address some of the Q4 earnings that have come in the last 24 hours. Canara Bank is the next one that's on our radar. The bank's profit has surged, asset quality has improved, but slippages remain slightly elevated. Margins, like with a lot of other banks year on year, they're under a bit of pressure. Satyanarayana Raju, MD and CEO at Canara Bank, is with us. Sir, good morning. Thank you very much for joining in. So I just want to quickly start with the basics. In the fourth quarter, the advances growth has been about 11%. So let's first talk about what is the kind of business growth that you're expecting in FY26 as a whole.
When our GDP projections are growth projections are around 6.25 to 6.5 at this moment, generally we expect that the 10 to 11% credit growth is reasonable. And of course, the expectation as against the market expectations of 12%. But we give a guidance of 10 to 11%. Always you remember that earlier also when we are given 10%, our achievement was 11.74%. We give little conservative on that advances side or even business side. Any figures guidance we give little conservative, but our achievements will be always more than what we are given. So at this moment, what we are given the guidance is 10 to 11% for the next financial year.
That's okay. So that's on advances. 11% is what you're expecting this year. So this margin pressure that we saw in the fourth quarter, your NIMs came down to 2.73 versus over 3% in the same quarter last year. Has the worst of it played out, or do you expect more pressure ahead till your deposits get repriced lower?
I request you to go through that our NIM as on December. Our NIM as on December, it is a 2.71. But whereas in the March, we could recover a little bit and it is improved to 2.73. That shows that how effectively we could manage that the cost of the deposits during the last quarter. So generally, if you see that the 2.71 to 2.73 in March, you are very much aware that it has gone to the peak, the cost of deposit in all the banks because of high deposit cost in the March. But we could very well manage and we could control our cost of deposit at 5.74. If you look at that from June 24, we were at 5.70, but when it comes for that March, it is 5.74. Hardly it is only 4 basis point increase is there in the cost of deposit. If you look at the yield on advances, we were at 8.66 in the June and March it is 8.83. Almost 17 basis point increase is there in yield on advances. This control we could do it because in the fourth quarter we focused more on retail deposits instead of going behind the competition in the bulk and CD. And that's what actually yesterday also I shared with that. We have, as a team, entire Canara Bank, we have taken a personal call that each staff has to canvass 10 lakhs retail deposits either in the CASA, and that campaign has went very well. And we garnered almost 17,000 crores. That's why up to December our deposit growth was little sluggish at 8%, but when concluded that the fourth quarter, our total cumulative growth is almost 11.01.
Okay, all right. Hi, sir. Good morning and good to see you in. Give us an outlook on the slippages then. That as well as perked up a little bit in the past quarter to around 2,700 crores. So if you could tell us what is the guidance going ahead and also fill us in with your credit cost guidance for the year.
Here also I would like to request you to go through that. Actually the slippage is not on the quarter on quarter. Actually the March quarter is, you should be aware that the entire banking branches will be audited and the system driven slippages, that's in the remaining 3 quarters it will happen. But when it comes for that March, local auditors, the branch auditors are those people on technical grounds also, they may ask us to pass some MOCs. If you compare that to March 24, our slippages are 3,400. But March 25, the slippages even after the complete audit of all the branches by the external auditors, it is only 2,700. There is a reduction of 700. From December to March, I expect that, yes, I accept that there is a 200 crores, 250 crores slippage is there. But these are all the 250 crores is only on the technical grounds. In the branches, there what the MOCs they are passed by the external auditors in the MSME. Earlier, our MSME slippage was only 1,000. Now, March it is 1,250. Otherwise, I didn't see anything that there is a concern in any of our RAM sector or even the corporate sector. The next question what you asked is the question you asked about that the credit cost. The credit cost, if actually speaking, it's much low. But what the decision we have taken last year, 2 years back, that our PCR should be improved, because when we compare to the peer banks, our PCR is comparatively low. We were at actually 87 in the March 23. So we want to meet that 95%, which generally the all banks, peer banks are comfortably placed at that. That journey is moving towards that improving our PCR. In the last just concluded year itself, our PCR has improved 360 basis points. By adding it, that means the additional provision we are doing on existing NPA accounts, that additional provisioning is included in the credit cost. Even then, we have come below the 1% and we are reported at 0.9%, and that guidance also we are given conservatively at 0.9, but the actual credit cost will be much low. The reason behind the guidance why we are given at 0.90 is also still we are aiming to move PCR towards the 95.
Okay, all right. So given the everything on board, I think the ROA for the last year was around 1.1%. What could the guidance be on that number for this year?
So that's also actually the December quarter, and if you see that the March quarter, our return on average asset is almost 1.25. That's December it is 1.09, and the March quarter it is 1.25. We have given a guidance of 1.05. Only the keeping the pressure on that NIMs, whatever it is there, if at all anything is there in the first quarter or second quarter, but definitely our return on asset will be much better than what we have given the guidance of 1.05.
Got that. Just one quick point, Mr. Raju. Good morning, Prashant here. Across segments, I mean, I think you provided a lot of detailed guidance here. Across segments, do you expect, in terms of credit growth, loan growth, do you expect at the margin any acceleration at all as we get into Q2, Q3 and beyond? There are these tax cuts, etc., which are maybe again incrementally expected to spur consumption a little bit. Consumption has been quite weak. Just your thoughts, sir.
No, actually, sir, when now the regulator has started reducing that repo rate, when the pricing rate, interest rates comes down, naturally it helps in increasing the consumption. And the RAM sector, definitely it will increase. When the RAM sector, if it is picking up, automatically the demand from the corporate sector also will improve. So I see that since already 2 times the regulator has reduced that rate, and we are expecting that another 1 or 2 cuts will be there in the next 2 or 3 MPCs, whatever it's the monetary policy decisions. So in that grade, the second quarter and third quarter onwards, I see that uptick in the credit offtake. That's the reason we have given, last time we have given conservatively at 10%, the market reacted that we are conservative, but ultimately the credit growth was at what we have achieved, that 12%, near to that 12%. But this time we have given in the anticipation of that second, third, fourth quarter uptick in the growth, overall GDP and the demand for the credit, we are given little higher, that 10% to 11%.
Yeah, no, absolutely. On gold specifically, Mr. Raju, there was that RBI directive as well, which came through, and many actually said that it was not so much directed towards the pure gold lenders like Muthoot and Manappuram, etc., but to banks who had really become very big and grown very fast in that segment. Any thoughts there?
No, I don't think that it is targeting for the banks and all, because we are the highest lender in the agriculture. But we can predict what are the concerns expressed by the regulator in advance. And we have taken some corrective steps in the last 2 years also. The only thing was that is actually primary security and collateral security. That is the only issue it is coming in that direction. And still it is a draft guidelines, and the clarifications they sought from the feedback from all the banks, we also have given on that. But the 1 year back itself, we have stopped lending the gold against agriculture in metropolitan cities. But to compensate that, we introduced a consumption loan against the gold loan in the metropolitan and all the places all over India. That has helped in increasing that. We are not lost the business in the gold. Only thing, it is only a moving from the agriculture जो classification to non-agriculture or the retail credit. Otherwise, last year also our growth is almost 19%, and this year we are expecting that we will grow around 15 to 16%.
Yeah, no, absolutely. It's a classification issue, as you're saying. Thank you very much for joining us and running us through that perspective. It's really helpful. Thanks indeed for joining us. That's the management of Canara Bank with some sort of thoughts on the business per se.